Hello, everyone, and welcome to episode 58 of Two Amazon Sellers and a Microphone. Today, Chris and I have a special guest with us, Jeremy Bell from Elevate Brands. Jeremy, thanks for coming on with us.
Awesome. Nice to be here. Good to see you, Chris and Dustin.
Good to see you. Thanks for joining.
Absolutely. We're excited to talk about this. This is always and I'll let you give a little background on you and then talk about Elevate Brands. But essentially, we're going to be talking about how Amazon sellers can successfully exit their Amazon business and sell. And this is just a great topic, a great something to know for all Amazon sellers so they can prepare for it. So we're excited to dig into this, Jeremy, and talk more about it. But before we do, give us a little bit of your background. How did you end up in the space and end up with Elevate Brands?
Yeah, perfect. Happy to. So my background is like, mergers and acquisitions, like investment banking, kind of private equity. Like I'm a finance guy where I started my career. And then about 2 years ago, like my wife and I moved to the US. I'm living in Portland, Oregon. I'm kind of nowhere near Wall Street. So when I was looking at like a job, a couple of buddies of mine had this Amazon business, which was kind of ticking along. And, the business then used to be called Recon Brands. And it was really like a Amazon arbitrage business focused on like wholesaling inventory. Mm-hmm. And they wanted to grow by buying companies. So it's just like a natural fit. I joined them, we kind of developed the strategy and we sort of settled on acquiring FBA businesses. And the kind of rest is history from there. So that was, I've been here for over 18 months now. We've gone through our kind of Series A round, raised a whole bunch of capital, debt and equity to kind of continue the strategy. So yeah, it's been pretty wild. Like the business has gone from 12 people to 40 people since I joined.
Oh, wow.
Yeah, and it's been like a bit of the other thing I'd say is like in the early days when we bought our first business, I was kind of on the tools managing that brand for the first kind of 3-4 months until we scaled up. So like that really gave me a baptism of fire on, how Amazon works, how the platform works. A lot of the things that could go wrong when that deal did go wrong. We got hijacked and stock outs, you name it, it all hit. So yeah, learned a lot of valuable lessons from there about what it's actually like to be an Amazon seller. I think that kind of differentiates us when we do go to market and speak to sellers. Because we kind of know the pain.
Yeah, it's a roller coaster ride as an Amazon seller, that's for sure. Lots of things can happen, but it's really interesting to hear that before when it was Recon, when you guys were Recon Brands, you actually were sellers. Your motto was, I guess you were buying products and reselling them on Amazon, and then that transitioned into buying the companies themselves, the brands themselves.
Yeah, exactly. We had when that business was at its peak, we had something like 70,000 units of inventory across 9,000 SKUs, and it was a big business. It did 15 million in revenue per annum at its peak, and it became just a very, very complicated business to manage because there was just so much happening. And we managed to do it. We scaled it up. We automated a bunch of processes. We had really good systems and tools in place. But then we sort of realized it's like the amount of money that it was actually making, you could go buy a really great business, FBA kind of private label business that made, had 4 or 5 SKUs. And it was just a lot less effort to kind of generate the same amount of, return on capital and money. And that's when the kind of light bulb went off and we decided to make the switch. And, we haven't we really haven't sort of looked back since making that decision. So it's been cool. It's been cool to sort of watch us transition. Like it made us very good at understanding the Amazon platform, dealing with Seller Central. Our business has been suspended off Amazon 3 times and we've got back every single time. So, that, they're all experiences I don't think a lot of the other groups have, but we've been through it all. And yeah, I think it's just made us much stronger operators.
That's really cool. And your name is Elevate Brands. And so it brings it to a point when somebody like Chris or myself decides to sell their business, they're selling their baby. They're selling their heart and soul and what they poured it into. And you guys, like they're putting it in the trusted hands with you that you're going to continue to improve that brand. And so that's just a really neat model.
Yeah, it's something a lot of sellers like the oldest couple we bought a business off were 80. So I kind of tell people, like, you meet a bunch of people and they're like, you know, I'm done with Amazon. They're like 35, they've grown a business, it's been stressful. I'm like, you guys aren't done. Like, you've got another 50, you know, like you guys have like another 50 years to go. Like, if the oldest people we bought a business off was 80, like, anyone can do Amazon if you get the strategy right and you have like the right kind of network of consultants to help you grow the business. And, you know, the factor that's important to some people is really like, you know, there's a lot of buyers out there today. And I think the thing that kind of differentiates us is, you know, we've bought some of the businesses we've bought are kind of trading up 150, you know, 140% within kind of 3-4 months of us taking it over. And, you know, what sellers, you know, really care about, it's like I've put 4 years of like blood, sweat, and tears into this business. You know, I've spent 2 days on the phone with Seller Central trying to figure out issues, and I care much more about this. You know, the money's important, but I do want to see this thing kind of survive and thrive when I you know, pass the baton. So we found, like, you know, because we are operators and we do have that Amazon experience, like we've won transactions just based off people think we're the better operator of the asset for the long term. Which is cool because, you know, there is a bunch of, you know, like I still speak to a lot of the sellers who have sold their business to us because, like, you end up becoming quite close with them and they're always interested to figure out how it's going after, you know, 6 months, 12 months down the line, like, how's the business performing? So it's cool.
There's a lot of money being thrown in this space now. You're seeing a lot of investors come in the FBA space and like just gobbling up all these Seller Central accounts and all these brands and like put them under portfolio and kind of like scaling up. So there's a lot of companies out there. What's different, like with Elevate Brands? What's different with if is it the valuation is going to be different, or is it the fact that, you know, maybe I can stick around a little bit longer and kind of like make sure that the pass off is smooth? What's different from these other companies compared to Elevate Brands that you guys do?
Great question. So I think what we really sort of pride ourselves on is, like, we're not a cobbling of kind of Wall Street guys that have said, hey, if I can go buy 100 Amazon brands for, call it, 3.5 times earnings, I can IPO it for 20 times. Like that's just a pure kind of financial play. And a lot of people saw some really good headlines last year and raised capital quite quickly and have jumped into the sector. And it's kind of interesting because the people selling the business often know more about Amazon and what's involved than a lot of those other groups when they're buying them. So for us, I think, like, we're quite proud of, like, our operating heritage and some of the kind of, you know, our operating heritage, and kind of, we started out as entrepreneurs. That's the genesis of our business. So I think when we engage with people in the ecosystem, like, we're not, this isn't a financial play for us. We're more like you, and for us, what we want to build long term is a really great portfolio of brands, because that's what survives long term. Like, when you've looked at enough businesses and kind of studied them for the last 2 years, you can see there are some businesses which are fly by the night. Like, they'll have a really great strong period of 12 months of growth, and then, you know, if you don't get the niche right or you don't get the kind of dynamics on that business right, like, they will just, those businesses will just decline, and everyone's seen it that's been in Amazon long enough. So I think for us, like, we're operators. When we don't bid on every asset, there's people out there that just put a bid on everything. We're really selective in what we bid on because we like the business and we think we can grow it. So that means that, like, when we do bid on something, we're really high conviction. We don't pull out of transactions. We don't try and screw sellers on, you know, renegotiating the price when we get through the underwriting process, unless it's, you know, completely warranted because something was misrepresented. So we sort of see ourselves as, like, we're fair, transparent, we're pretty honest. And then when we see your business, if we're involved and we're bidding on it, then we're really high conviction. And that's because we think we can grow it, and that's because we like the opportunity. The other thing I'd say is, like, when a lot of sellers are looking at the bids that they get, there's like an element where they'll get paid like 80% of the cash up front, and then 20% will be deferred, and it's called an earnout. And basically, if the business continues to grow, the amount that the seller can make through the earnout payment in 12 months' time, that can be a lot more money. And we sort of look at our track record and we're like, well, I can show you all the case studies of the brands that we've grown. I can show you the case study of where a brand fell 70%, and then 2 months later it was back to being flat, and then now it's 150% up. And like that was just because, that was a pretty harrowing experience, but because we've got the Amazon kind of pedigree, like we were able to fix that. So yeah, I think it's everyone's got cash, everyone can pay the price, but I think the differentiator with us is we're transparent, we're operators, and we're high conviction on what we bid on. So yeah.
I think I got a couple of questions there. So the first is like, how long does a brand or an Amazon seller need to be actively selling before it's something you'll consider acquiring? Like, is it 3-6 months? And then on top of that, once you acquire it, what's that process look like? Where like, I got a manufacturer that I'm dealing with. How do I make sure that you're taking care of that manufacturer, or you work with that same manufacturer, or is it just here's my account, here's the products, and you go find your own manufacturers? Or do you continue to work with the same people that we've already worked with when we build up these businesses?
Yeah, it's a good question, and one that comes up quite a bit. Like, a lot of sellers say to us, hey, I built this business using this wholesale agent in China, or I've got a really tight relationship with the factory, like they help build this business with me to get it to the point where I can sell it. So our philosophy is we do have people. We've got a full kind of sourcing and logistics team, and we've got like a physical presence in China. We've got employees on the ground in China. So our approach is, look, if it's not broken, don't fix it. Of course, we'll always look for, sellers. Like, there's a lot of with Amazon businesses in particular, sellers will often focus on what they're really good at. Like, if they're really good at PPC or branding, they'll focus on those. One of the things that most people sellers don't really concentrate on is have you gone back to the factory and asked for a volume discount, or have you thought about changing the size of your packaging? And most sellers just care about, am I going to have inventory there on time? So for us, we'll say, look, we'll leave what's in place there today. In some cases, we've bought businesses and then we've tried to offer the kind of sourcing agent a full-time job with us because they're that good. So yeah, our philosophy, if it's not broken, don't fix it, and work with handing over the supply chain is really, really important, because if you don't have any inventory or there's delays, then you've got nothing to sell. If you've got nothing to sell, then your competitors are selling product, they're getting better BSR, they're getting more reviews, your competitive position's going out the window. So part of our underwriting process is we want to go and meet the supplier and get to know them. We send our team in China out to meet them and just start to build a relationship pretty early in the underwriting process. So yeah, the supply chain side of it is key, and that's one of the parts that really worries me, because if they've got a great relationship with the seller for 4 years, then there's Elevate Brands is on the scene. We've got to make sure they're happy to work with us, because a lot of these suppliers, a lot of it is relationship based.
Sure.
So it's key.
And then how long does an account need to be before you buy it? If I start a Seller Central account now and I launch 2 products and I'm doing 6 figures in 6 months, is that a time to sell, or how seasoned does it need to be?
It just depends on the group. For us, we get really excited when we see a seasoned account that's been around for more than 2 years, because you kind of know it's if you're doing Black Hat or you're gaming reviews, you're probably going to get caught by Amazon over a 2-year period. And if you've got a bunch of SKUs that are kind of mature and are growing well, then you've got a bunch of new SKUs that you're launching that haven't got 12 months of growth, even better. Because we can kind of look at them and figure out, how are they trending and is that going well for us? That said, there are businesses that have been around for, 18 months, and they're just flash in the pans. It's they've come out in 18 months, they've built a business that does $1 million in, profit, and they're exiting it. And I sort of just look at those, and the question I ask myself is, one, how do you know that trend is going to continue? Mm-hmm. 2, how did they get to that position so quickly? And, often we find if you go search through the Facebook ad libraries or whatever it is, you can see they're giving away free products. There's a whole bunch of breadcrumbs around the internet where it's yeah, you guys have done a bunch that wasn't quite in line with terms of service, and that's risk that transfers to us if we buy the business. So, and then like the third element is if the business has only been around for 18 months, like a bunch of my team sit there and say, well, why would you go pay goodwill for this? Like, you know, like you could also launch a competing product and get to the same position. Now, we've never done that because it's really bad signal for us to the market. But like if it's growing that quickly and so short, it kind of like we get less excited about those opportunities. So ideally, 2 years is a great kind of window for if the account's been open for over 2 years. Like we start to take those pretty seriously.
And how's that transition work with Amazon? Like if I sell you my account, how does that work on Amazon's end? Like, are you now just getting login credentials, or do I need to contact Amazon and say, Elevate Brands now is the brand owner? Like, what's that look like?
It's like that part of it can be really complicated because if you don't do it right, then you can get locked out of the account. And we've had accounts where we've got the entire process down pat, but like I've spent 2 days on the phone to Seller Central trying to get either Elevate back into the account or the old owners. And you know, if you don't do it properly, you know, that happened over 12 months ago, and we've kind of learned from that experience. But like effectively what we do is there's either two ways you can do it. We either log into Amazon and we change all the credentials, the admin details, all of those sorts of things over to Elevate, and you do that over like a number of days so you don't trip up the security bot. And then effectively that's it. Like you transferred the account over, we're in control, you change the bank account, we get paid. There's a whole bunch of like the trademark and the website and, you know, the Facebook page and any licenses, like if they're using Solels, or like we need to like transplant you guys over to us too. So there's a bunch of like transfer stuff that happens. So that's the easiest way, and that's the way that we prefer to do it. The other approach is, okay, like we've got our own Seller Central account. Can you just assign brand registry ownership over to us and then send all your inventory, you know, recall all your inventory and then send it into our new Seller Central account? We don't like that approach. And the reason we don't like it is because you're going to stock out until you get all your inventory into the new Seller Central account. And then with like inventory limitations and all those sorts of things, it's just not the preferred way to do it because you never want to stock out. That's one of our golden rules is just whatever you do, don't stock out.
That's a
good golden rule. That's a real rule.
Yeah, it's like, wake up, you know, do you have enough inventory, yes or no? Like
that's right. Yeah, that's the kiss of death is stocking out. Let's talk about how long these transactions take. I mean, I've heard a lot of people who've sold their businesses. It's taken them months and months and months to complete a deal with all the due diligence and underwriting. What's that process look like with you guys for a brand that you're interested in buying? What's the typical turnaround time on selling it?
So if it's a US-based business, just a US like Amazon.com business, and it's FBA, or they use a 3PL provider, so it's easy to kind of verify how much inventory they have, and the seller's done like a half decent job of, you know, they've got a proper CPA, they've got all their bank transactions kind of down pat, they save down every invoice and customs declaration. Like if all of that is to hand, you know, we can kind of get the financial side of it done in 2 weeks. Then it's like another week to kind of close out the legal bits. I've got to write like an investment committee paper, and getting the deal done in 4 weeks is like really achievable. We had a deal where we kind of signed an LOI the week after Christmas. Everyone took a break, and it's now that deal's closing next week, and it's taken us, you know, 4 weeks to the day to kind of get the deal done. And it's because it was just a simple like 6 SKU business on Amazon US. And it was just really, really easy. So, you know, one of my bigger tips to kind of sellers thinking about selling is like prepare your business for sale, you know, get really good at like administration, just doing the basic admin, and go and hire yourself a good CPA, because, you know, they'll make your life so much easier when you exit. Because for me, like the first thing I come in and do is like, how much profit does this business actually make? Now, we had one group come to us and they're like, look, I've got 97K of cash in the bank. And it's like, okay, that makes sense. What's your revenue? And they're like, oh, we made 2.3 million in revenue. I'm like, your business didn't make 97 grand profit last year. It just didn't. Like, there's no way that like, given how much the goods cost you, like there's no way you made that profit. So like we went through the exercise, and effectively we did all their accounting for the last 2 years for them. And then in the end, we're like, your business actually made 450,000 profit. If you'd gone to, someone else, they may have given you 300 grand for the business, and you thought you got a good deal. Whereas actually, this thing's worth, $1 million plus. So in the end, they didn't sell to us. So like the key thing there is like, if you want to sell, get organized. Like hire a CPA, make sure your ad spend's firing. Just run the business, prime it for growth, and then exit. Because the deals can literally get done in kind of 4 weeks' time. If the records aren't as good, it's just going to take longer. If your business is a European business, it's a little bit more complicated because transferring the accounts in Europe is much more challenging. So it can take a little bit longer. And there's, in that case, it's still pretty quick. Like it can take anywhere from kind of 6 to 8 weeks. But it's just more complicated when you have a European business involved. In my prior life, to do deals, it used to take 6 to 4 months. It was like considered a reasonable time frame to get a big, talking like $100 million transaction done. The beauty of Amazon is Amazon effectively is your accountant. Like they standardize all the data, and it makes it really easy for someone like me to do my job. So yeah.
And can I do like my US account separate than my UK account, and I can keep my UK account, or is it like all one thing where if I'm selling the brand, I'm essentially selling everything that I have access to, or is it just marketplaces?
If you sell the brand, you kind of sell the brand, and like we're always interested in buying the whole business. We're about to close the deal. We'll just transfer the US account to our US. To a US company that we have. And then in Europe, what we're going to do is like, we're going to do the inventory transfer just because we don't want to go down we just don't want to go down the path of trying to take control of the Seller Central account. In Europe, you can have a whole bunch of problems when you try to assign a Seller Central account. We've heard a bunch of nightmare stories. So our preferred approach for Europe is we just sell down the inventory, send it into our own account in Europe. And then there's just like reconciliations that get done between like the buyer and the seller. It's sell the whole lot. You'll get paid more for it. A nice European business.
Speaking of getting paid, what's that multiple running these days?
It really depends on the business. So multiples are informed by a couple of things. Like how much profit do you make? The more profit you make, the bigger your multiple. So like if you make over $1 million EBITDA, like the multiples that people are paying are kind of anywhere from 3.5 plus. That's where the market is. To like last year, that number was kind of down in somewhere between 3 and 3.5. And if you make under kind of $1 million EBITDA, like the multiple can kind of be 3, around 3 or less. It just depends. There's a lot of capital in the space at the moment, and valuations are a little bit all over the shop because every time someone misses a deal, they're getting more and more desperate and bidding harder on the next deal because they've got, like people have raised kind of $1.5 billion of capital has come into the space, and every time someone misses a deal, they're just getting more and more desperate to buy the next thing that comes along. So we're kind of seeing like we'll bid a price, like we may or may not win the acquisition. But then on the next deal, like prices are just edging up, and the feedback we're getting is like people are kind of desperate to get their money to work because they've raised billions of dollars in capital. So multiples, I think it's a really strong time to exit your Amazon business because there's a lot of capital. Businesses have got a lot of growth from last year and COVID, and some of these new players, in my opinion, aren't necessarily pricing that kind of one-off COVID kit properly, and they're just paying a full multiple based off what businesses did last year. And we can kind of see from some of the data sets that we reference, it's like those trends aren't going to continue forever. So like you've just got to be really, really careful with how much you're valuing a business and what multiple you're applying to it.
How much does where you are in terms of your growth affect the multiplier? Like if my product has just been on a serious trajectory up, does that evoke a higher multiple as opposed to something that's more flat, stable?
It's an interesting question because if the business is growing, then like in some ways, sellers look at like buyers look at it and say, well, if it's growing like 30% each month, if I pay a little bit more for it in 12 months' time, if it keeps growing at 30%, the multiple will be like it'll look cheap based on how quickly it's growing. So in some ways, like the favorite deals that I like are the ones that are just flat. Like if you show me a business that's been flat in 2019, 2020, like I get really excited. And if I think there's a bunch of upside in like the PPC, listing optimizations, like the digital assets, new SKU launches, like I'd rather pay more for that business because I know it's a stable, steady as it goes type of business. And when we implement kind of our investment thesis, like we can double those businesses, and we've got a pretty good track record of doing it. That said, like I think the businesses where like anyone selling, you want to be selling like if your business is growing, that's excellent. And you want your business to keep growing as you're kind of going through the sale process, because if it foot faults, a buyer's going to start to kind of ask a lot of questions and they'll go to their conviction to want to do the deal. So, one of the things I tell a lot of people thinking about exiting is like, make sure you've got like a really strong growth story around what you're going to do with the business. Like have a plan for, I've just rolled out video ads and they're converting like crazy and, you're going to get the full benefit of that for 12 months. Or I've just done DSP ads and like they're converting like crazy as well. Like, like the seller, you seller can think about that's all growth that you can lock in for the next 12 months. Give a seller like launch a bunch of SKUs and show them those SKUs are gaining traction. Have a big pipeline of stuff that we can roll out when we buy it. Like that's what gets people that tend to get like really big multiples on or bigger multiples on businesses. Like they package all of that in a nice tidy bow and kind of hand over the strategy to sellers and say, look, I can't execute on this. I'm an entrepreneur. There's 3 people in my team. You have like a team of 40. Like here's the strategy. And that's when I've seen in the past, like that's when sellers have done really, really well because they've just packaged everything up into a bow and handed it off.
How there's different product types and just questions keep just coming through my mind here. So there's different types of like one-off purchases where I'm only going to buy Bluetooth headphones or one time, and then there's other ones where I'm going to subscribe and save, and I'm going to constantly be like a repeat purchase every month. I'm going to always get this, this certain oil or this certain lotion. I'm always going to get this every month. Does an account that has subscribe and save type of products get a bigger multiple than something that has just a one-off purchase?
It does, yeah. So if it's got subscribe and save, that's a higher quality business because it's got like repeat customers, and then you can start to think about the customers there and like ad spend over like total lifetime value of the customer. Now a lot of people don't know how to calculate that properly. Or sellers don't really know what they're sitting on there. It's like, I've just implemented subscribe and save and like revenue's grown 10%. It's like, that's a huge opportunity for a bunch of sellers. So when we look at subscribe and save businesses, we kind of naturally think that just that feature of them makes them slightly higher quality because it does have that recurring revenue. Like any business you look at, like whether it's Amazon or like a retail business or whatever, if it's got like a subscription recurring revenue model base, they're really attractive because once you win that customer once, you can kind of bank, depending on what your lifetime value is, you can bank like another, 12 months, 18 months worth of revenue out of it. So it is attractive. That said, like, it depends on the product and the niche and kind of a whole bunch of factors that go into it. Like we own a pet supplement business. And one of the things that got us excited about that was there's a lot of new pet owners and people are just clicking that subscribe and save button. So it's cool. It's really, really cool.
Yeah, it's really cool.
So let's take this from the buyer, the seller's perspective. Someone like Chris and I who are growing our businesses and looking to exit. You've already touched on a lot of things that they should be trying to do. Like you mentioned the CPA and really getting your financials in order. And you touched on advertising, setting up. I thought it was really interesting that you touched on developing a plan for the future, like after you've sold. I think that was a really interesting touch that could separate you as a seller if you've got a roadmap sort of for future growth. But what are the big things that would help a seller make this transition easier and more attractive to a buyer?
Yeah, so we have like this acronym called GOAT, like get your goat on. And what GOAT stands for is like the G stands for growth. So have a growth plan around what you're going to do to grow your business. From an operations perspective, like stop storing inventory, like make your operations as simple as possible. So have standard operating procedures around how you order inventory from the factory, have standard operating procedures for if I get a question from a customer about the product, like here are the stock standard responses, all those sorts of things. So build out standard operating processes and procedures, because, you know, for a new buyer, like you just like, how do I run this business is a question that I often get when we buy something and hand it off to the team. And like, if you can hand over all of that stuff, that team loves you. So like, you know, setting up standard operating procedures, if you've got VAs or like, you've got someone like you guys who's managing the advertising approach, like document, like here's how we engage with them, here's who we call, here's like the brief, like this is the strategy on all those sorts of things. Like just simplify your operating processes and build out operating procedures. The big one is like 3PL. You know, we've bought businesses and I've had to go to like garages and count like the number of boxes in the garage, like for a couple of the first deals that we did. And like we counted the inventory 5 times before we like agreed on what the right calc of inventory was. Like hire a, if you have a 3PL, it makes it much easier for me to just, 3PLs do a great job of auditing the inventory. Makes it much easier for me to organize a truck and just pick up that inventory and send it to Amazon. So, simplify your operating processes. So the A stands for accounting, which we touched on. Like, I gave you the example of the people that had like the, 2.4 million in revenue and they didn't know how much profit they made. Like, don't be that person, because you may get taken advantage of. The second side of it is like, just have one bank account for the entire business. Because when we look at a business, like we pretty much rebuild all the accounts. Like we take all the Amazon transaction data. You guys have that really great kind of dashboard that you have in your platform. Mm-hmm. We basically recreate that ourselves. And that's one of the real cool things about your actual solution is you've got that really great dashboard that helps sellers know how much profit they make. And that's something that I find very like interesting. It's a lot of sellers actually don't really have a good handle on financials, and that dashboard that you guys have is pretty much what we create when we look at all the transaction data. So where I was going with that is have one bank account, because what we do is we basically, this is how much we think you've sold, this is how much you spent on inventory, or you've told us you spent on inventory. We just tick that off against the bank account to verify it's accurate. One seller we met had 16 bank accounts. And like in the end, it was like really, they basically set up all these bank accounts and just applied for credit cards so they could have like debt to buy inventory with. But they used each of these accounts, and it was impossible for us to figure out what was going on with the cash flow. So have one bank account, have a credit card if you want to get points, like just keep life very simple. And then the last one is like trenches, like, make sure you register your IP, make sure you registered your domain name, even if you don't use it. Like, sign up for a Facebook group, grab the internet, the Instagram handle, like all that sort of stuff. Like just get that stuff locked in, because, I've looked at a business. It was like a really, really great business. We loved it. We put the strongest bid in on the asset. The broker kind of saw the bid and was like, you guys are winning the pack here. Like you guys, like your bid is miles ahead of everyone else. Like you're going to win the asset. And then in the end, like some information came out. It's like, oh, these guys don't have a trademark. So in the end, we sort of looked at it and said, well, that's a huge problem, because they don't have brand registry, which is what that meant. And also, if we apply for the trademark, we may not get it. And then you've got this brand on Amazon, which, someone could come along and basically tell you to change your name. And that's a huge problem, like working through that problem with Amazon. So in the end, we pulled out of the deal, and it would have been an awesome deal for us. So get your IP, get your trenches locked in place. So it's like growth, simplify your operations, accounting, and like getting your financials in order, and build out your IP trenches. So yeah, that's kind of like what we pitch. If you do all of that, you'll have no problem selling.
And if I'm a seller and I don't have like a website yet, or I don't have my Facebook page yet, is that where I would just go to your guys' site? And if I'm interested in selling, you guys would evaluate that and be like, hey, everything's good here, but we'd really like you to get your website a domain registered and get a Facebook page, or would you just take it over and do it yourself?
Yeah, so the way the right way for a seller to package that up is it takes like 40 minutes to go to grab all that stuff. So just go and grab it. Like you'll get it in 40 minutes time and then it's done. So just go and grab it. But the right way to like message that story to buyers is, we've had all this great Amazon growth, but we don't even do anything on Facebook or Shopify or whatever. Like that's the way to, like, that feeds into the growth narrative.
Sure.
So like I kind of like I get excited when we look at businesses and it's like, we've got a simple website. We don't spend any money on it. It kind of makes like 3 or 4% of our revenue comes from the website. We find with websites, like you build a simple website, like a Shopify website, people search for the product on Amazon and then end up buying it through your website. Mm-hmm. Even though the inventory is fulfilled from Amazon, like it's just interesting how it happens. But as part of that, like you're getting all their email addresses and a whole bunch of like contact information that Amazon won't give you. And that's marketing gold. So like, yeah, in some ways, like if you haven't done that, I would pitch that as like, as a message to like a buyer, like I haven't even done any of this and it's great upside for you, and build that into the growth plan. So yeah, it's trying to turn, like, the art of selling your business is like, a lot of it comes down to really good storytelling. So like I look at 30 different opportunities a week, have a bunch of calls with buyers and all those sorts of things. But the ones that kind of help me get excited about their business, like telling me, like being passionate about it or telling a story about how they can grow it and I can grow it, like they're the ones that I get really excited about. So yeah, that's a long-winded answer, but I think I covered the question.
No, it's good. It's good.
I like it. Yeah, I mean, I like that approach. Tell the growth story.
Get them excited. Like, just tell them the story. It's like, yeah. It's like, if you're not the best at PPC in the world, don't worry. Like you just say like, my PPC sucks, and then like we get super excited with it. Like we're buying a business at the moment. They did like hundreds of thousands in revenue, and they spend $1,000 on PPC. And like that deal is going to be a slam. It's going to be a slam dunk. Like I've already pegged this as like, this is going to be the best deal we do all year.
Yeah.
So it's just like things we like to see. Yeah, we like those.
Yeah, it's kind of like anyone, like you could give that business to anyone and say, can you make us more money from advertising? It's like give me a target.
Oh, that's fascinating. I mean, well, I'll tell you just, when I'm sure Chris is the same way. When we started our businesses, I don't think exiting was even on our minds. I mean, just or even that it was possible, that there was going to end up being a marketplace like this for these businesses. But it's a very real thing, and I love what you guys are doing. Just here, I mean, I can tell from you just the passion you have about getting excited about these brands that are growing that you can work with. I think it's really cool.
Yeah, it's super exciting. I think where the market was like 2 years ago, like you didn't have many options. There was a bunch of like different kind of, it was like the people buying these businesses were, a few like family offices and small private equity groups. There were a few smaller groups like 2 years ago doing the roll up, and those guys largely had the run of the market to themselves. And then like, a bunch of just like bankers, lawyers, dentists that wanted to own an e-commerce business. Like that's who you're kind of up against in the bidding processes. Whereas like you fast forward now, like the markets, like it was a pretty like it was almost like a cottage industry, whereas now the market's becoming really sophisticated with like sophisticated capital coming into the space. So for sellers now, it's like entrepreneurs I speak to when we buy their businesses, it's like, what are you going to do next? And a lot of them I say like, just go build another business. Like you've done it, you've got a great outcome, you've got the skill set. Players like me are going to be around for a long time. We're not really launching our own brands yet. So if you can build something in 2 years' time, you'll be able to sell it for, you'll be able to continue to get great outcomes. Like we're buying a business, a couple of the businesses that we've bought at the moment or we're about to acquire, there's just groups of people who are like you two who know how to run Amazon, and they're just building businesses to sell them, and they're just flipping it. And every deal they do, they're like, first one they'll flip for like a couple million. The next one they'll launch will be a bigger, harder niche that they're getting into where they need more working capital. And then, that business they could flip for 8, and they're just snowballing, just snowballing, getting bigger and bigger with each deal. So it's like, yeah, I kind of say to a lot of the entrepreneurs, it's like, just keep focusing on what you're good at, and like you can make serious money over the next kind of 10 years. So it's super exciting. Like, it's just the whole Amazon ecosystem is like really exciting. Like, when we look at, you know, COVID kind of brought forward the growth of the whole sector like 10 years. And we don't know how, you know, if that's going to switch back to where it was in kind of 2019. But I think, like, even just fast forwarding, like, you know, who knows where Amazon's going to be in 5-10 years. It's not going to be any smaller than it is today.
No. What? Just one last question, because you brought it up, that just, you know, this is growing now. I mean, there's a lot more buyers in the space and a lot of stuff. Is Amazon on their end doing anything to make these transitions easier?
So yeah, it's a great question. Like, we've asked our Amazon account rep a bunch of times, like, what does Amazon actually think about all of this? And the first time we kind of raised it, like, they had no idea it was happening. But there's been a few small things that they've done. So like 3 years ago, you couldn't have one legal entity own more than one Amazon Seller Central account. Like, you would just get banned straight away. And then they kind of softened it and said, oh, you can have different legal entities that own different Seller Central accounts as long as they're selling different products and there's no crossover. Whereas you fast forward to today and it's like, actually, you can have one legal entity own multiple Amazon Seller Central accounts if each of them serve a different kind of business purpose. So like, you could have, you know, different Seller Central accounts selling pet products, running gear, and, you know, like any other product, and Amazon won't have a problem with that. So like, they're kind of, I think they're kind of evolving as well, as they're seeing more of these account transfers building. From Amazon's perspective, like, if there's bigger groups in the market, in the ecosystem, you know, in some ways it's easier for them to manage because there's just less sellers that they need to take care of. And these bigger groups are bringing, like, you know, like, as the kind of sector's kind of consolidating, you know, you look at some of these bigger aggregators, they've got like full teams of creatives, like, trying to improve brands. And I think what that results in is a better kind of shopping experience for customers on Amazon. Because some of these like simple product listings that they looked at, you know, it used to just be 7 photos and that was it. Whereas now it like looks and feels like a proper brand. There's a video, there's really great content, there's excellent customer service. So I think from Amazon's perspective, I think my view is that they're probably, whether or not they know it's happening, they probably do, but they're probably kind of encouraging it because it's just going to improve the experience to like the end customers. But that said, there's still like a lot of opportunity for the you know, entrepreneurs to keep launching and building businesses because it's just so big. Yeah.
That's great stuff, man. We know that you're a busy guy and you got stuff to run to here.
Deals to close.
Deals to close for sure. But Jeremy, that was great information just about what sellers need to do to prepare to exit and just what the state of it is right now. I mean, it's really fascinating to me. So we can't thank you enough for coming on and giving all your expertise to our listeners.
Yeah, not a problem. And yeah, if anyone's interested in kind of, you know, selling or they want to have a chat, like I probably have like 3 or 4 chats a week with people thinking about what they should do. Like, we're more than happy to kind of, lend our time and help provide people advice, because if you grow the business and you get it right, like, you can make a river of gold from selling your Amazon business. So yeah, feel free to reach out to me from, you know, jeremy@elevatebrands.io or through the website, and love to connect and kind of learn your story and see how we can help you. So yeah, gentlemen, thank you for it's been fun to chat, and keen to check in a couple of months to tell you how it's all going.
Yeah, we'll definitely
definitely get you back on. So we encourage everyone out there, if this is on your horizon to exit, definitely reach out to Jeremy at elevatebrands.io. Also, if you're looking to grow your business and you're looking to improve your advertising, we would love to talk to you about how Solozo can help automate and optimize that process for you. You can go to Solozo.com and you can book a time with either Chris or I. We love talking Amazon. We'll talk anything you want about Amazon, and we'll show you how Solozo can help optimize your advertising for you. Also, please check us out on our Facebook page, Solozo on Facebook, on LinkedIn, on YouTube. We live stream all of our podcasts like we're doing right now. And you can be notified when we're going live with the great guests like Jeremy that we have all the time. And please like and subscribe to our podcast on your favorite podcast platform. Anyway, thanks so much, Jeremy. Thanks for joining us, and we'll be with everyone the next time.
No worries. Thank you. Cheers. Thanks.